Greetings and good day.
I hope you're doing well.
I'm here with you for the daily Bitcoin analysis on March 6th. We're currently reviewing the weekly time frame. As you can see, Bitcoin's price managed to experience more than a 12.5% increase over the
7 powerful volume trading indicators: footprint, volume profile, and fast scalp. Level up your trading.
past week, alongside the onset of the war that we witnessed. Ultimately, after the price increase we witnessed, it reacted to the 50% line of the weekly FVG and pulled back downward. Currently, on the weekly scale, it is trading with more than 7.5% growth in the price range of $70,700. After the war between Iran and the United States began on February 28th, we saw a price drop, but the price quickly rebounded and started its recent upward movement. In such circumstances, it was mostly expected that the crypto market, as a risky market, would experience a deep decline. But the reason for this opposite reaction can be considered the fact that in recent months we have witnessed a heavy decline in the crypto market and Bitcoin. This drop was so significant that we can now expect that there are no major sellers left, and Bitcoin is nearing the end of this downward trend. As we can also see on the daily time frame, after the deep drop that occurred at the beginning of February, the price rebounded and started fluctuating within a specific range. Now, for the first time in the past 2 days, it managed to break out of this range to the upside and reach a price of $74,000. Currently, the most important support for the price of Bitcoin has been at $60,000, and if this level is lost, there is a possibility of further decline. But as we have seen, the price is currently testing the resistance zones ahead, and if it can once again break through the $74,000 level with strength, we can expect the price to move toward higher liquidity levels. We are currently analyzing the 4-hour time frame. We can see that at this point, the war between Iran and the United States began. Following the initial reaction of the crypto market to this event, there was a sharp price drop. However, after reacting to the 4-hour FVG zone, the price strongly rebounded upward. Furthermore, over the past week, we can observe that the price has been in an uptrend, consistently forming higher highs and higher lows. During this movement, the bullish candles have been much stronger, while we see that the corrections are accompanied by very small candles. We are currently analyzing the inflow and outflow of liquidity into Bitcoin ETF funds. We can observe that after the start of the war, during the first 3 days of this week, there was a significant inflow of capital into Bitcoin ETF funds. However, yesterday, compared to previous days, there was a smaller amount of capital outflow. Alongside this, we are also examining the Fear and Greed Index, which for the first time in the past month has risen to 25. Throughout the entire month of February, this number was in the extreme fear range, and now, for the first time after a month, it has moved out of that range and entered the fear zone. We are currently analyzing the Bitcoin Liquidity Map. We can see that with the recent upward movement, Bitcoin has effectively collected its buy-side liquidity, and right now, there is a significant amount of liquidity near the price level around $70,069. The next sell-side liquidity levels are at $69,500 and at the $68,800 level. By examining these points on the chart, we can see that the best sell-side liquidity is located around the previous low and in the 1-hour FVG close to the current price. With the onset of a wartime atmosphere, we know that investing in risky assets would not be the right move at all. However, contrary to expectations, we have seen an increase in the prices of crypto assets since the beginning of the week. So, for now, as long as geopolitical tensions persist, we expect Bitcoin's behavior to remain the same. However, if we do enter any trades, we will strictly adhere to maximum risk and capital management. Based on this, we are now looking for an opportunity to enter a buy position. With its recent candles, the price has collected the liquidity in the BPR zone. But as we observed, there is a significant amount of liquidity near the price level around $70,069. So, we can wait for the price to collect the liquidity in this area. Or even if we see a deeper move down to the 1-hour FVG zone around $68,800. And if the price shows with pin bar and weak candles in this area that its short-term corrective move has ended, we can enter a buy position and aim for a 1-to-1 and 1-to-2 RVR ratio as our take-profit targets. Wishing you success and profitable trades.